Welcome back to XRP Insider, your trusted source for the biggest crypto updates, Bitcoin market analysis, and breaking financial news shaping the future of digital assets. Today's story is absolutely explosive because Bitcoin has just reclaimed the $77,000 level after a major announcement connected to President Donald Trump and a possible Iran peace agreement. But while many traders are celebrating this sudden rally, some veteran analysts are warning that this could actually be the beginning of another devastating repeat of the 2022 crypto crash. The market is suddenly caught between bullish excitement and terrifying bearish predictions, and what happens over the next few days could decide the direction of Bitcoin for the rest of 2026. Right now, traders across the world are watching every candle, every headline, and every price movement because this moment feels critical. Bitcoin dipped below $75,000 just yesterday, causing panic among short-term investors. But after the geopolitical headlines started spreading, the market immediately reacted with strong momentum. However, despite the pump, Bitcoin still struggled to break through major resistance near $77,100, and that rejection has many analysts worried that the rally may already be losing steam before it even fully begins. The crypto market exploded with volatility after President Donald Trump revealed that a peace agreement with Iran had reportedly been largely negotiated, including discussions surrounding the reopening of the critical Strait of Hormuz. For anyone unfamiliar, that shipping route is one of the most important oil corridors in the entire world, and any positive development there immediately impacts global markets, investor confidence, and risk sentiment. As soon as the news hit social media and financial networks, Bitcoin responded aggressively, climbing back toward the $77,000 zone. Traders who were previously nervous about geopolitical instability suddenly rushed back into risk assets, and crypto became one of the biggest beneficiaries of that optimism. But despite the excitement, experienced investors know that markets often react emotionally before reality fully sets in. That's why many professionals are being cautious instead of blindly chasing this rally. The market has seen similar situations before, where positive headlines create temporary momentum, only for prices to reverse sharply once traders begin taking profits or once uncertainty returns. Right now, Bitcoin appears to be balancing on a very thin line between a breakout continuation and another painful rejection that could drag prices much lower in the weeks ahead. Another major factor behind this sudden Bitcoin surge was a massive derivatives reset that shook out leveraged traders across the market. In the last 24 hours alone, more than $289 million worth of Bitcoin positions were liquidated, creating extreme volatility that fueled aggressive price swings. Whenever huge liquidations happen, the market often experiences sharp rebounds because excessive leverage gets wiped out, allowing prices to stabilize temporarily. Bitcoin's Relative Strength Index, also known as RSI, climbed towards 68, which suggests recovering bullish momentum without yet entering dangerously overbought territory. For many traders, this created hope that Bitcoin may still have room to continue higher if buying pressure remains strong. But others argue that these rebounds can be deceptive because they sometimes occur inside larger bearish structures. That's exactly why technical analysts are divided right now. Some believe Bitcoin is preparing for another massive rally toward $80,000 and beyond, while others think this is simply a relief bounce before another deep correction. The emotional battle between bulls and bears has become intense, and social media platforms are filled with conflicting predictions as investors desperately try to figure out what comes next for the world's largest cryptocurrency. One of the biggest talking points shaking the crypto community today comes from BitMEX founder Arthur Hayes, who recently delivered a very direct message regarding MicroStrategy chairman Michael Saylor. Hayes explained that investors need to fully understand Saylor's priorities because, according to him, Saylor's responsibility is ultimately to protect his company and its shareholders, not necessarily ordinary Bitcoin holders. That statement instantly sparked debate across the crypto industry because Michael Saylor has become one of the most influential Bitcoin advocates in the world. Hayes describes Saylor as a genius in corporate finance, especially because of how MicroStrategy leveraged its balance sheet and financial relationships to build massive Bitcoin exposure. According to Hayes, Saylor's ability to launch products and structure financial strategies comes from a very unique corporate position that average investors simply do not have access to. Hayes also made it clear that he was not accusing Saylor of wrongdoing. Instead, he was reminding the public that corporate incentives are very different from retail investor interests. That distinction matters because many smaller investors sometimes follow powerful figures without fully understanding the risks involved. In volatile markets like crypto, blind trust can become extremely dangerous when price action suddenly changes direction. At the same time, another analyst known as Financelot has released a prediction that is now spreading rapidly across crypto Twitter because of how shocking it sounds. According to Financelot, Bitcoin's current price structure looks almost identical to the pattern that formed during the 2022 market collapse. The analyst shared historical cycle comparisons showing repeated timing patterns between Bitcoin bull markets and bear markets dating back years. What caught everyone's attention is the claim that Bitcoin's all-time high in 2025 reportedly aligned perfectly with previous cycle timing models. Because of this alignment, Financelot believes the current market could continue following the exact same structure that previously led to a devastating crash. According to the prediction, Bitcoin may experience a temporary slowdown over the next couple of weeks before entering a much steeper decline later in 2026. The most frightening part of the forecast is the projected bottom near $19,000 by October 2026. That prediction shocked many traders because it would represent one of the largest collapses in recent Bitcoin history. Naturally, the crypto community instantly became divided between those who think the analysis is brilliant and those who believe it completely ignores new market conditions. The historical cycle data presented by Financelot appears incredibly detailed, which is one reason why so many traders are taking the warning seriously. According to the chart, Bitcoin moved through a pattern of approximately 1,064-day bull cycles, followed by roughly 364-day bear markets. The analyst claims this structure repeated multiple times across previous Bitcoin market cycles, creating what appears to be a mathematically consistent rhythm in long-term price behavior. Based on that framework, the 2025 peak supposedly arrived exactly when expected, strengthening confidence in the model. Now, Financelot argues that Bitcoin's current descending channel strongly resembles the same structure seen during the 2022 downturn. Price is reportedly testing the upper boundary of that bearish channel right now, near the $77,000 level. If Bitcoin fails to break through and gets rejected again, the analyst believes another wave of downside pressure could begin almost immediately. Traders who follow technical analysis closely are paying careful attention because repeating historical patterns often influence market psychology. Even when the future does not perfectly mirror the past, similarities in investor behavior can sometimes create self-fulfilling momentum as traders collectively react to the same charts and predictions. Despite these alarming warnings, many Bitcoin bulls argue that today's market environment is dramatically different from previous cycles. One major difference is the rise of institutional involvement through Bitcoin ETFs, which continue attracting billions of dollars from traditional investors. Supporters of the bullish case believe ETF inflows create a much stronger foundation underneath Bitcoin compared to earlier market cycles when retail speculation dominated price action. In addition, there is growing discussion around regulatory developments like the Clarity Act, which many investors hope could improve the overall crypto environment in the United States. Supporters argue that these new factors could disrupt older cycle patterns and prevent Bitcoin from experiencing another catastrophic crash like the one seen in 2022. However, skeptics counter that even institutional markets are not immune to fear and panic selling. They argue that macroeconomic conditions, interest rates, and geopolitical instability still have the power to trigger massive corrections, regardless of ETF demand. This ongoing debate is creating one of the most emotionally charged environments crypto traders have seen in months, because both sides believe they have strong evidence supporting their predictions about Bitcoin's future direction. As traders look ahead to the next trading week, attention is increasingly shifting toward key price levels that could determine whether bulls or bears gain control. According to several analysts, Bitcoin needs to firmly hold above $76,500 and successfully reclaim $77,100 with strong volume if buyers want to maintain momentum. A convincing breakout above those levels could potentially open the door towards $78,500 and even the $82,000 area near the 200-day moving average. For bullish investors, that scenario would significantly weaken Financelot's bearish thesis, because breaking above resistance would suggest the descending channel structure is failing. Many traders are also closely watching geopolitical headlines, because if progress on the Iran peace discussions continues, risk assets like Bitcoin could receive additional support from improving global sentiment. But even optimistic investors admit that the market still feels fragile. One negative headline or one major rejection at resistance could quickly shift confidence back toward fear, especially after the volatility traders already experienced over the last several days. On the bearish side, analysts warning about further downside believe Bitcoin's rejection near $77,100 could become the beginning of another major sell-off. According to this scenario, Bitcoin may gradually fall back towards $75,000 during the middle of the week, before potentially sliding towards $73,000 if support levels fail. Some traders believe many recent buyers entered positions purely because of excitement surrounding the Iran headlines, meaning those positions could quickly unwind if optimism fades or negotiations encounter problems. In highly leveraged markets like crypto, emotional buying can reverse extremely fast, especially when traders begin protecting profits or avoiding losses. Analysts also warn that a breakdown below $74,500 would likely confirm a much more dangerous bearish structure. If that happens, panic selling could accelerate dramatically, because many technical traders use those key levels as decision points for entering or exiting positions. The fear surrounding a possible repeat of 2022 would likely intensify across social media, potentially creating additional psychological pressure that pushes even more investors to sell. At the same time, there is also a third scenario that many professional traders believe may be the most realistic in the short term. Instead of an immediate breakout or catastrophic collapse, Bitcoin may simply continue moving sideways between roughly $75,500 and $77,100, while the market waits for stronger confirmation. This would reflect the uncertainty currently dominating investor sentiment. The Iran peace headlines are certainly positive, but negotiations are not fully complete, and markets often hesitate when outcomes remain uncertain. Meanwhile, ETF inflows continue supporting Bitcoin from below, preventing sellers from gaining total control. This combination of conflicting forces may result in choppy price action with no clear direction for several days. Traders often find range-bound markets frustrating because prices move aggressively in both directions without establishing a sustained trend. During these periods, emotions become even more dangerous because impatient investors frequently make impulsive decisions based on short-term movements. That's why many experienced traders are emphasizing patience right now, instead of aggressively chasing either bullish or bearish narratives until stronger confirmation appears on the charts. Another important aspect of today's crypto environment is the growing influence of macroeconomic and geopolitical developments on Bitcoin's behavior. Years ago, Bitcoin was often viewed as a separate alternative asset that moved independently from traditional financial systems. But today, the cryptocurrency market reacts heavily to global politics, economic data, interest rates, and international conflicts. The latest Iran headlines are a perfect example of that transformation. Investors now treat Bitcoin as both a speculative asset and a macro-sensitive financial instrument. When geopolitical tensions rise, markets often become nervous and volatile. But when signs of peace or stability emerge, investors frequently regain confidence and move back into higher-risk assets like cryptocurrencies. This evolving relationship between Bitcoin and global events means traders can no longer focus only on crypto charts. They also need to monitor international developments, government policies, and economic signals that may impact market psychology. The crypto market has matured significantly over the years, and that maturity comes with new layers of complexity that many retail investors are still learning how to navigate properly. One reason why Bitcoin remains so emotionally powerful is because it constantly challenges investor psychology, unlike almost any other asset in the world. During rallies, excitement spreads incredibly fast, creating fear of missing out that drives more buying pressure. But during corrections, panic can become equally intense, causing traders to sell emotionally instead of strategically. Right now, both emotions are colliding simultaneously. Some investors see Bitcoin reclaiming $77,000 and believe a massive breakout is beginning. Others see the exact same chart and believe it represents the final trap before a devastating crash. This emotional split is creating enormous tension across the market. Crypto influencers, analysts, and traders are all presenting dramatically different interpretations, leaving ordinary investors confused about which narrative to trust. That uncertainty itself contributes to volatility because emotional markets tend to overreact to every new piece of information. In many ways, Bitcoin's biggest battle right now is not purely technical or fundamental. It is psychological. Whoever controls market sentiment over the next few weeks could ultimately determine whether Bitcoin continues climbing higher or enters another painful correction cycle. Institutional participation is also changing how traders think about Bitcoin's future. Large financial firms, hedge funds, and investment companies now have far greater exposure to crypto than ever before. This institutional involvement brings more liquidity and legitimacy to the market, but it also introduces different trading dynamics. Institutions often manage risk aggressively, meaning they can sell quickly during periods of uncertainty. At the same time, they can also provide powerful buying support during corrections if they believe long-term value remains strong. This creates a more competitive and unpredictable environment compared to earlier Bitcoin cycles dominated mainly by retail traders. Many investors believe institutional demand through ETFs could prevent another collapse toward $19,000 because larger players may aggressively accumulate Bitcoin on major dips. But others argue institutions are ultimately profit-driven and may not hesitate to reduce exposure if macroeconomic conditions deteriorate. This debate continues, fueling uncertainty because nobody truly knows how modern institutional markets will behave during a prolonged crypto downturn. The current cycle may end up rewriting many assumptions about how Bitcoin reacts under pressure. The discussion surrounding Michael Saylor and MicroStrategy also highlights a broader issue within crypto investing: the danger of blindly following influential personalities. Over the years, many public figures have built massive audiences by promoting strong opinions about Bitcoin and digital assets. While some of these individuals have contributed positively to crypto adoption, investors sometimes forget that influential figures often operate with completely different financial incentives and resources. Arthur Hayes' comments served as a reminder that corporate executives make decisions based on shareholder interests, not necessarily the interests of everyday retail investors. That does not automatically make their strategies wrong, but it does mean smaller investors should think critically before copying them. In highly volatile markets, understanding risk management becomes far more important than simply following popular narratives. Bitcoin's long-term potential may remain strong, but short-term volatility can still destroy poorly managed portfolios. That's why experienced investors constantly emphasize discipline, research, and independent thinking instead of emotional decision-making driven by hype or celebrity influence within the crypto industry. Meanwhile, technical analysts continue studying Bitcoin's chart structure with intense focus because the current setup appears extremely sensitive. Every rejection, breakout attempt, and support test is now being interpreted as evidence supporting either the bullish or bearish case. Some analysts believe Bitcoin is building energy for a major upward continuation, especially if macro conditions improve further and ETF inflows remain steady. Others point to weakening momentum indicators and historical cycle comparisons as reasons for caution. This disagreement reflects the reality that financial markets are rarely predictable with complete certainty. Even the best analysis can fail when unexpected events reshape investor sentiment. That's why risk management becomes absolutely critical during periods like this. Traders who overcommit emotionally to one direction often suffer the most when volatility suddenly shifts against them. Right now, Bitcoin's price action resembles a high-stakes chess match where every move matters and every headline can instantly influence market psychology. The next few weekly candles may ultimately determine whether this recovery evolves into a powerful rally or fades into another major correction. For long-term Bitcoin believers, today's volatility is simply another chapter in the cryptocurrency's dramatic history. Bitcoin has experienced multiple devastating crashes throughout its existence, yet it has repeatedly recovered to achieve new all-time highs. Supporters argue this resilience proves Bitcoin's long-term strength and growing adoption worldwide. They believe temporary corrections are normal and even healthy within a rapidly evolving financial market. However, critics argue that past recoveries do not guarantee future success, especially as global economic conditions become increasingly uncertain. Rising debt levels, changing regulations, and geopolitical instability all create challenges that could impact crypto markets in unpredictable ways. This ongoing battle between optimism and caution defines Bitcoin investing more than almost anything else. investors constantly struggle to balance belief in the long-term vision with the reality of short-term risk. Today's market perfectly captures that tension because excitement surrounding the Iran peace headlines is colliding directly with fears of another major cycle collapse predicted by bearish analysts. At this moment, Bitcoin remains trapped between two competing narratives that could shape the rest of 2026. On one side, bullish investors see improving geopolitical conditions, strong ETF demand, and resilient market momentum supporting higher prices ahead. On the other side, bearish analysts see repeating historical patterns, dangerous resistance levels, and signs that the current rally may already be losing strength. Both arguments carry weight, which is exactly why the market feels so uncertain right now. The next several trading sessions could become extremely important because they may reveal whether Bitcoin has enough strength to finally break above resistance or whether another rejection triggers a deeper sell-off. One thing is absolutely certain: volatility is far from over. Crypto traders around the world are preparing for major moves in either direction, and emotions across the market are running incredibly high. Whether Bitcoin eventually climbs toward new highs or crashes toward lower support levels, the coming weeks may become one of the most important periods of the entire 2026 crypto cycle.